Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Friday, July 24th, 2009. The greenback came under pressure today against most of its rivals as positive data from Germany and the Eurozone helped boost risk appetites. The euro-dollar pair, after sliding in late trading yesterday, rose about 100 pips overnight to test the 1.4250 area. That level had been set up as a point of resistance on Monday, though it was breached during the week. In New York trading, the euro gave up some of its loftier gains after failing to break that level. One of the pieces of data that propelled the euro was a rise in German business confidence. The IFO Institute's Business Sentiment Index rose to 87.3 in July, the fourth straight month of improvement. The German economy may return to growth in the third quarter as the tentative global recovery is helping to boost exports, while government efforts to increase domestic spending begin to kick in. A second report showed that the Eurozone manufacturing PMI rose to an 11-month high of 46 in July from 42.6 in June, flash estimates showed. New orders fell at the slowest pace for 11 months, helped by the weakest drop in manufacturing orders for 16 months. The services PMI, meanwhile, increased to 45.6. Though the sectors remain below the 50 level, implying contraction, the pace of this decline is easing. In the UK, the economy there shrank 0.8% in the second quarter, a figure that undershot forecasts and pressured the pound following its release. Though it's an improvement on the first quarter when growth was down 2.4%, the annual rate fell to show a decline of 5.6%, the biggest annual decline since records began in 1955. The annual decline included record slumps in construction, banking, and business services. It is now the fifth straight quarter that the economy has contracted. The pound-dollar pair slid about 140 pips from its levels before the UK GDP release, falling to 1.6390. That tested an upward sloping line of support, and the slide in the pair stalled there. For the week, the pair has gyrated around the 1.6450 level in sideways price action, and it looks set to finish the week about 100 pips higher. The euro-pound pair, following a break of support yesterday and a drop to the 0.8570 level, rallied 100 pips in the wake of the disappointing UK GDP results. That rally undid the losses in the pair the last two sessions, though the euro was unable to test its high from Wednesday. The US dollar managed to hold most of its gains against the yen from yesterday's session, though it did slide slightly towards the start of today's session. The 94.60 level acted as support. Stocks in the U.S. were trading lower as weaker than expected earnings from Microsoft dampened the recent earnings optimism, and traders took time to reassess the strong rally on Thursday that had pushed the Dow to its highest level since last November. The U.S. dollar-Canadian dollar pair continued its fall, testing the area below 1.08 in today's trading, though it rose above 1.08 in afternoon New York trading. The loonie has gained more than 300 pips in this week's trading and is about 850 pips stronger than it was at the beginning of last week. The last week of July will bring some important U.S. data that will give traders a sense of the housing and manufacturing sectors and the overall U.S. economy. U.S. housing data includes new home sales and the S&P Case-Shiller House Price Index. On the manufacturing side, Wednesday will bring a report on durable goods orders. The end of the week will bring the first version of second quarter U.S. GDP, a figure that is expected to show the economy continuing to shrink, though at a slower rate than in the first quarter. Important releases from other countries include employment data from Germany and Japan, mortgage and housing price data from the UK, and the interest rate decision and statement from the Reserve Bank of New Zealand. And that concludes our coverage of the Forex market for this week. We thank you for joining us here at CMSFX.com. And from all of us here at CMS Forex, we hope you have a great weekend.